Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, July the 22nd, and wanted to talk a little bit about what we've seen in markets this week and what we saw ending last week and what we've seen through this week. And wow, what a volatile week has it been in the stock market since we last spoke. And so last week we finished the week down in the S&P 500 around 1.8%, right at 1.8% down for the week. However, what's really interesting in that as well is the mid-cap indexes were down over 3% and the small-cap indexes were actually down over 5%. And now the mid-cap and the small caps, which have been leadership for this year, have actually fallen behind, or the mid-caps have actually fallen behind the S&P 500 on relative performance year to date. And as we went over the weekend, one of the things that we started to see in the market is we started to see the 10-year Treasury yield come down and down and down and down and tremendously down, touching levels below 120. And what that was is that's fears in the marketplace and people's fears over the weekend that the Delta variant was going to cause economic slowdown. And when you have inflation coming in hotter than expectations and coming in higher, margins are shrinking on companies and their earnings potential, and then you have the potential of the Delta variant to slow down economic growth. That caused the big market sell-off on Monday, where you saw the Dow on its lows down around over 900 points on the lows and finished down 790 points on the day. And so what you saw between last Friday and this Monday was a 3% correction in the marketplace. And we have seen that happen 3 other times this year. And all 3 times it has been followed immediately by a rally right back to the levels you were before the correction. And so what we saw this week was no different than what we saw back in February and what we saw in May of this year, is an immediate rebound on Tuesday where the markets were up about 600 points and finished the day up 200 points on the Dow yesterday, getting the S&P and the Dow and the NASDAQ positive for the week, even after the sharp declines on Monday. And one of the things that you really want to consider and to take into account is what is driving all of this and what is allowing the market to rebound as quickly as possible. Well, one of the major reasons is there's an old adage out there, and it's so true because the Federal Reserve plays such a role in the marketplace, is don't fight the Fed. And so the Fed has continued to signal that they were going to have easy monetary policy. They're going to allow inflation to run hot. They're going to continue their asset-based purchases. So don't push back on what the Fed's doing. The other thing to take into consideration is because of all of these policies over the last year and some change that the Federal Reserve has done, the world is awash with liquidity. So whenever there's a pullback, there's estimated that there's about $5 trillion right now sitting in money market funds ready to be deployed into the marketplace. And when you look out, when you have these corrections of what is caused by fear-based selling, you have these corrections in the market, people go in and flood into treasuries, but then they realize there's nowhere to go and they can't really generate any types of returns, because when you take your return in a 10-year treasury and match it up with the rate of inflation, your real rate of return is a negative rate of return. So you then realize, okay, now I see a discount in the market and it's bought up. And that's what we have seen happen this year because there is so much liquidity in the system that can support these 3% pullbacks that we see in the marketplace. So we are starting to see some internal rotations within the market too. And if you want to understand what those internal rotations that we're seeing are, call us. We'd love to talk to you about what we're seeing or how it's going to impact your individual portfolio. We'd love to talk to you about it. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of their day and enjoy the rest of your week. Thanks so much.